Now, as I'm doing this video, the Nio stock price is down 3.2% pre-market, and this comes after Nio gave us their Q1 earnings, which, boy, I must say, it was not that good. Let me start by saying that. But there is some positives. I mean, as seen on the screen, you notice that Nio, for the Q1 earnings, they saw total revenues coming at $1.658 billion, with vehicle sales amounting to around $1.369 billion, and non-EV sales or non-car sales equating to roughly around $288 million. This is the total revenues that Nio generated for the quarter, and the earnings per share came at 41 cents as seen on the screen. So we are still a bit far from reaching profitability. Something that I said in the previous video, which was very important, which are the net losses. You will notice there that is seen on the screen, the net losses for Nio came at $930 million, which is an increase of 30.2% from the first quarter of last year, and a decrease of 5.1% from the quarter 4 earnings we saw. So there's been some slight decrease, but look, man, 5% is not that much, or 5.1% is not that much. So net loss is still exactly where it was, or it's roughly around the same net losses that it was. There's not that much of an improvement. 5%, like I said, is too little. And the guidance that they gave in Q2, I'm trying to give you all the important numbers, like I said, right? The guidance which they gave us for Q2 is between 72 and 75,000, which simply means that on average, Nio is expecting to get an all-time high in terms of deliveries, right? Because the most that Nio has done is 72,689 cars, which you saw that in Q4. And if now they are expecting 72 and 75, it means that on average they are expecting to get an all-time high in terms of deliveries, right? If you have to check the average now, cash at hand, which is the next key term, Nio saw their cash at hand dropping to obviously $3.6 billion. This is as of the 31st of March, but they wrote something there. They say, we have been incurring loss since our inception. We incurred operating cash outflow from the first quarter ended on the 31st of March 2025, and our current liabilities exceed our current assets. We had a negative shareholders equity as of the 31st of March 2025 based on our ongoing concern and liquidity assessment, which considers our business plan including revenue growth, optimization of operations efficiency to improve operation cash flows, working capital management, and the ability to raise funds from banks under available credit quotas and other sources when needed. We believe that our financial resources, including our available cash and cash equivalents, restricted cash and short-term investments, cash generated from operating activities, and funds from available credit quotas and other sources will be sufficient to support our continuous operations in the ordinary course of business for the next 12 months. So they say that considering all this and the options of raising cash and what they have, the $3.6 billion and the revenues that they generate from their operations, they believe that they can still survive the next 12 months, which I suppose that is good. I mean, one of the things that the company says or highlights, which is very, very important for investors of Nio to note, right, is that Nio announced also that on the 7th of April 2025, the company completed its 4 billion HK or $555 million offering of shares, right? They raised around $555 million, which that $555 million, unfortunately, it is not included on this cash at hand, because the cash at hand, the $3.6 billion that Nio currently has at hand, till it is the cash that they had on the 31st of March, which these $555 million which they raised, which by the way they managed to raise this in the single day, it came on the 7th, so it is not included there. So right now we might be obviously sitting at over 4 billion in terms of cash at hand, which is something that is very, very good, and we need to note that, right? One thing that led into Nio, of course, not doing that well, or that led into Nio incurring a lot of losses, is, of course, you will know that they have been launching new products. New products requires a lot of money, but there is a good thing that Nio has been doing. You will know that there is a CBU strategy that I've been talking about, when it's cutting positions, or it's reducing the number of staff that they have and duplicating positions in the company, and making sure that whatever they are investing in, it has got a good ROI. That is what they are implementing, and they also talk about that in this earnings report. Now, expenses from operations, as seen on the screen, you'll notice that loss from operation came at about $438 million, and selling, general, and administrative expenses equated to roughly around $606.4 million. So selling, general, and administrative expenses sitting at $600 million, whilst R&D, research and development, equated to roughly around $438 million. Now, this is something that you must know, or this is what is making Nio to incur a lot of costs, and to see that this is the amount of money that they were spending in Q1. It is something that, of course, for the short sellers, it raises, of course, concerns. But the good thing is that, look, the new CEO has been open with us to say that, look, things should get better from Q2 because of the strategies they are implementing. Just this morning we read that obviously Nio, in terms of the parts that they are using to build the cars, they've cut so much cost in a way that there's no, of course, spillage of materials that they are using to build their cars, which I think that I'll do a separate video. We'll go through that and understand how this will unlock Nio to take it to the next level. Now, going to the gross margins for Nio for Q1 came at around 7.6%. This was compared to the 4.9% we saw in the first quarter of last year and 11.7% we saw in the fourth quarter. One of the things that, of course, had an impact into Nio's gross margins is obviously the discounts that they were offering in Q1. You will know that one thing that even Deutsche Bank highlights that is very positive about Q2 is that Q1, you will know that Nio was offering 0% of interest for the next 5 years for those that are buying Nio. That has got an impact into gross margins. Q1, you will know that models like the ET5 Touring, the normal price of that car is around 298,000 RMB. That is the starting price of the ET5 Touring, ET5 Mercedes. But what we saw in March, or February, March, that car came down to 198,000 RMB, which meant that, or which just simply means that there were like 100,000 RMB of deduction of discounts that were being offered, not only by Nio but also including the subsidies. But I must say, Nio was also offering some massive discounts to try to get the deliveries, to try to get the orders, which sort of like worked for them for the month of April, as we saw, of course, deliveries improving. For month of March, where we saw at least delivery starting to improve. Now, this is one thing that we read, but the good thing is that Q2 now has officially begun. Here is something that is very important, guys. You will notice that the ET9 flagship model for Nio started sales 3 days before the end of March, meaning that the sales, the revenues, the gross margins that comes with this flagship model for Nio are mostly going to come now in Q2, right? In Q1, this model was only sold in 3 days, and like I said, or like what we've been discussing, this is the vehicle onto Nio that will really push Nio's gross margins so good. It is why, or it's one of the reasons why the Nio CEO would say, let's watch things change from Q2. Over and above this, Nio has launched, of course, Firefly, but we don't know much about gross margins of Firefly. But this ES6, EC6, ET5 Touring, ET5 Mercedes, those ones we know that gross margins are going to explode like crazy this month, because Nio is now using their own developed autonomous driving chip, Shinji NX9031 chip. It's being utilized. ET9 uses 2 of these chips, whilst these ET5 Touring, ET5 Mercedes, EC6 and ES6 uses one of Nio's built in-house chip. And we know that Nio, because they are using this chip, they save roughly around $1,380. Over and above that, which they also touch something very important, Nio is using their own operating system. They are no longer paying people or trying to get their operating system or full operating system from third parties, but they are building, or they've launched a SkyOS last year, which is what they are using for their cars, which this is supposed to also improve some gross margins. There is a live earnings call. There is a lot that we are going to discuss, or what we are still going to discuss. But another something that is very important is the guidance of the revenues that they gave. Nio gave a revenue guidance of around 2.69 billion to over 2.76 billion dollars. This is what they are expecting to generate in Q2, right? And something that you will note also on the revenues, it looks like Nio is expecting to get an all-time high in terms of the revenues that they will generate now in Q2, because the most revenues that Nio has generated came in Q4, where we saw those over 72,000 deliveries, and the revenues were $2.69 billion. And now they are saying the least they can do is $2.69 billion to over 2.76, which is something that means that they're expecting an all-time high in terms of revenue generation. Revenue generation coming at an all-time high, gross margins also improving. This equals, of course, Nio getting some pretty good solid earnings per share, which hopefully it is closer, or at least it is 50% down from these 41 cents that we saw today. Now, from the 75,000 guidance that Nio gave us, it simply means that because we know the deliveries of April 23,900 and the over 23,200 we saw for May, this simply means that when we subtract the 72 to 75,000 guidance which they gave us, Nio is expecting to deliver somewhere between 24 and 27,000 deliveries. That is their range. We will see what Nio will deliver, but that is what they are expecting to deliver. Blue sky is coming. Long term will win. Those that are persevering throughout the headwinds, the share price will most definitely be rewarded with time. I just thought I'd come and give you this quick update, and this is a summary of what we saw. Of course, the earnings, or the Q1 earnings of Nio coming out to be. There will be a live earning call taking place, or in fact, as I'm doing this video, there's a live earnings call taking place, and I'll be giving you the latest developments coming from the live earning call, where the investors, Deutsche, Morgan Stanley, they will be asking questions to Nio, which will be very important. That information is very, very important, and we'll wait, we'll see what transpires. Remember something very important: the $555 million that Nio raised, it was not factored on the 3.6 million of cash at hands that they have right now. That one you must also remember. Otherwise, blue sky, I still believe that it's coming. Long term, I still believe that we are going to be paid, and those that are persevering will most definitely be rewarded with time. Like, share, subscribe. I will see you on the next one, my dear friends. That's all from me, and God bless you all.